This is Tom Aspray with the Viper Report. This is the next video in our series using the T&J Artificial Intelligent Watchlist approach to the markets. In today's video, we'll look at sector rotation. We've seen a lot of that since the November lows here. Now we're in early April, and I'll explain how the watch lists, are dependent on marking time and analysis. Those of you who followed my work know I do a lot of work with the advanced decline line, and that really tells you, when to be, lightly or fully committed to the market. And then through the watch list, I'll show you how it tells you which sectors are hot and those that are not. We've seen lots of examples lately. This is a sector watch list from last Friday's close, reinforcing what those of you who follow the markets are already aware, that energy has been the hot place to be recently. You can see 100% bullish, all are showing weekly DTS, 3-day DTS, and daily. Volume analysis is positive, and they're all above their pivots. This is the whole scan of the key stocks that are in the XLE Energy ETF. Things were quite a bit different. This is the November 3rd sector watch list. You can see at that point only 25% were positive, and you can see lots of red where there is now green. Let's go back to early November and see how this transition occurred. This is one of my standard charts. Was the Spider Trust here. We have three different moving averages. The dark red is the 20-day EMA, which I concentrate on it quite a bit. The pink, the 50-day, and then the blue, the 100-day. We also have the pivot levels that are very important, and we'll show you why. And down below this, we have the S&P 500 AD line. Those of you, I teach extensively about the AD lines and have written about it, but the brief synopsis is it measures a cumulative total of advancing minus declining stocks. So when it's rising strongly like that, it's a time to be very long stocks, until the AD line starts to flatten out, as it did in August, and was pretty much in a downtrend up through November 3rd when this chart ends. A couple days prior to that, you can see the AD moved above its moving average. And below that, we have the NYSE All AD line, which measures the broader market, if you will, 2,800 some odd stocks in the NYSE composite. Shows a similar pattern, but they don't react the same. You can see that. It was the S&P was a bit stronger from the late October lows, but it's also above its moving average, so that's the first positive step. And subsequently, you'll see we can advance this. You can see that we had a brief pullback, but now the AD lines are really starting to accelerate to the upside. When you start to see the slope of the moving averages I teach, that's the time that it's a really great time to buy stocks or ETFs. Of course, I look at a bunch of different segments in the market, both the averages and the sectors. So this chart is the QQQ Trust, which has been leading the market for most of the time since the 2009 bottom, but in particularly, I spotted indications at the start of 2023 that growth was the place to be. So we have the QQQ. You can see that this line here is also as of November 3rd. So we'd broken back above the downtrend here. That was a positive sign. And you can see that the NASDAQ 100 AD line had also was testing its downtrend. More importantly, at the bottom, we have the relative performance, the RS. That measures the performance of QQQ to the S&P 500. So when it's outperforming and rising, like it has been for a good part of 23 and also in 24, it tells you that those are the stocks you want to concentrate on, or those are the ETFs you want to concentrate on, because in an up day, they're going to outperform the S&P 500 or the SPY. So you can see right early in the rally, we broke out of this RS pattern, and that was really a bullish sign. You can see by just a few days into November, the AD line is well above its sharply rising moving average. So that was the all clear signal for stocks. An important part of correctly utilizing the information from our watch list is to also look at the individual sectors from a technical standpoint. So here's a chart of the Technology Select XLK. Has Apple, Microsoft, most of the big tech stocks. And you can see that, the correction that we identified from the July highs right around in here, was in force until we got into early November. So this chart, is as of November 3rd too. What was interesting, in October was there were early signs that it had already bottomed. And so we established our long positions there originally, I think in October 3rd, right around in here. And you can see, what were the clues there? Well, you can see we have lower lows here in price, but look at the relative performance. It's forming higher lows, okay? And it moved back above its moving average. So that was a sign that, it was starting to outperform the S&P. I've written things there on the Viper report, show you that that's what happened in 2009. The XLK started outperforming the market before that market bottom. Very strong also in the on-balance volume here. You can read more about it on the YouTube Viper report, but you can see it broken through resistance. So it was leading prices higher by early October, and also lower lows in price, higher lows in the OBV. That's a bullish divergence. That indicates that those stocks were being accumulated. So those were our favorites. And you can see at this point, even in November 3rd, the averages hadn't quite broken out to the upside, but XLK had, and the OBV was already making a new high. So if you look at the sector report, as of November 3rd, you can see information technology was a 41%. We're showing 3-day DTSs. The same for weekly. 50% were above their quarterly pivot. Generally, pretty much all the rest were positive. The DTS, the 4-hour, the 3-hour, etc. That was not the case, as we showed you earlier, the energy stocks, which was about the opposite. Very little green, lots of red. So when the technical studies look that strong, then you start to look at those stocks that are starting to flip DTSs, as we mentioned in an earlier video, as prime buy candidates. We also like the action in the communication services. You can see 91% were above their pivot, and also the weekly DTS were at 58% better than the 3-day. If we look at the report 2 weeks later, as of November 17th, energy still weak, only 9% above their pivots. Look down here, you can see information technology has zoomed to 91.7%. So financials were also strong, but the information technology, you can see all that red we'd seen 2 weeks ago, almost all of it other than Cisco and Texas Instruments, TXN, were negative. So that confirmed that, growth stocks, high tech, were the place to be. So of course, once we're in a position, we monitor pretty closely, and is when things are looking very strong, which is the case by we got into November, as it moved up toward the initial target above 180, the 20-period moving average is rising sharply. The RS here and the OBV are both stronger than prices, so that was a good sign. But it was also our initial target based on the entry point down in here. So for traders, we took a nice at that point and decided to ride the rest of it out. Investors, we stayed with our long positions down here. So we did get a pullback to the 20-period EMA, just missed a second entry there, and then we continued to go higher, and reached our longer-term target, by early 2024 after a sharp setback. By studying the charts, you can, to me, this was not a reason to get out or anything. It was a sign that maybe the rally was losing some steam. We had a sharp setback from 193 to 183, held the S1 here, and then continued to power higher. And at that point, then we did raise stops after that low. And we got up above 200, and we took some profits on our remaining trading positions and also on half of our investor positions. And what happened then, we started to see that, even though, it was made a new high here at 207.73, we're starting to see some deterioration here in the RS. And so, we were happy to be out of that. We were looking for new things to move into. Look at the current chart as of Friday afternoon. You see that we really haven't made a lot of upward progress. 212, 211. So we don't. We try to sell on strength. So we got out, I guess, 206 or something for the half that investing position. We're holding the rest. We don't see any reason yet, based on the weekly analysis, to get out of the investing position, and we're looking for a pullback. Based on my horizontal support and resistance levels that I teach quite often. We'll concentrate that in the next video. If you have not read any of my articles on Forbes.com, my contributions, they are later posted on the Viper report. You can see in this one I discuss the advanced decline analysis and how the S&P 500, the new high that no one was expecting, was projected last June. Also some more on the watch list. Everyone after January was very strong in the financial community. We're looking for a lower February. This was written at the start of February. I said that's not necessarily the case, and here's a reason why stocks could stay strong. So I hope you can, lots to read here, as well as educational articles. If you'd like to subscribe to the Viper ETF or the Hot Stocks Report, you click on either one of these. Take you to PayPal. It's a month-by-month, $34.95. I would humbly say it's a bargain. And once again, we'll have, as of the 8th, of March, I'll be putting new ones up this week. You can see what our current positions were as of that point in time. And that'll, help you see how we're doing. And, also, you can see this is our full positions as of the 8th of March. In the ETF and here for the stocks report. Great. If you'd like a copy of the current sector report, just email tom@viperreport.com and put sector report in the subject line, and we'll send you off one. So should be another interesting week next week. We got the CPI report, and as I pointed out to clients yesterday, the reversal did decrease the upside momentum. So stay tuned.